First of all, thanks for everyone for taking some time today to come and talk about crowdfunding. I think we're all here because we're big believers in the space, and we're excited about this being quite an important transformational change that's going to positively affect a lot of companies and a lot of investors. So I'm here just to talk a little bit about the journey for an investor and how that's changed. I don't know if I've got a clicker here. Here we go. So a little bit of background about me, and I just put that up there just for a bit of context. I've been involved in quite a few periods in technological change, which I'm very lucky for. This one up here, see if that works. Magna Data. That when I was 21, I started an internet service provider, and that was really at the start of the internet boom. I managed to sell that before the crash in '99, but yeah, thank you. But I had a first-hand seat at a transformational change event, which was the internet coming, and then we had the tech boom and so forth. I worked for Intel for a little while up in Hong Kong, and then realised that there was this thing called venture capital, which was funding a lot of these exciting new companies, and decided to come back and start an angel group, which was Tinshed. Tinshed itself didn't endure, but it was the motivation for Sydney Angels. I'm a co-founder of Sydney Angels and also the Sydney Angels Sidecar Fund. So in the early days, in the early 2000s and now, the concept of angel investing is very different. Back then it was about, no one knew what it was, venture capital was a black art, and the world we live in now is just completely different. So fast forward a little bit, I've been a corporate advisor for over a decade. I've listed, you might have heard of Vocus. I was the advisor to Vocus on their listing on the ASX. I also listed a company this year called Big Tin Can on the ASX. I've done a lot of M&A, done a lot of capital raisings. As an angel investor, I've invested in probably more than 30 companies. I've blown a lot of money as well and had poor investing strategies. So I'm going to talk a little bit about that today. I'm on the board of a listed telco called Superloop. I was more recently chairman of Big Air, which sold to Superloop for about 190 million last year. And so I've got about nearly 9 years of ASX listed company non-executive director experience. So the reason I'm telling you that is it gives me a bit of a perspective on some transformational changes, being involved in companies from starting them through to exiting them, and also being involved in big companies and little companies. And then there's this thing called crowdfunding, which is one of those, I think, generational thematic changes, which is going to change the way that we all can relate, can invest, can get access to companies that we've never been able to get access to before. So this is just a little list I put together of Australian technology success stories. Most of those names you will have heard of. The big early players in the classifieds markets, car sales, Seek, REA, the real sort of giants, and have earned their places. Atlassian, the current darling, though perhaps wisely didn't list on the ASX, given its market was mostly international, but you'll see there a lot of platforms, a lot of marketplaces. But I have a question, is who's invested in any of those companies? Okay, a couple of people, that's great. Who invested before they were listed? No one, right? So the key here is, how do we get involved in these companies before they're multi-billion-dollar companies? How do we get 10x returns, 5x returns, 2x returns? Or, how do we even get into the IPO? Crowdfunding is kind of the answer there. So this list was created by Investec and H2 Ventures. I think it's a terrific, grouping of exciting, fast-growing technology companies. You'll see the green dots are the ones already listed. There's 4 there that happen to be, you happen to have had the opportunity to invest in via VentureCrowd. But once again, you'll see a lot of marketplaces, a lot of platforms, and disruption is real, and that's where a lot of the opportunity is coming from. The question you need to ask yourself is, well, what do you want to invest in? It's not a simple question. there's a lot of opportunity and a lot of different classes. So, for example, if you chose to invest in, you want to invest just in fintechs, there's a dizzying array of companies that is just on this list alone. But, I would love to have had a bit of a stake at the table in Society One, or Simply Wall Street perhaps, or Oz Forex, or, Currency View, one of those companies. They're terrific opportunities. The equity crowdfunding company is a little bit different because that's exactly what we try and do. We provide access to invest in things, and we can allow you to invest in ourselves as well. But if it's not fintech, maybe it's clean tech. Is that where you want to invest? Clean tech's pretty sexy. Well, how do you get access to these companies? Do you want to be involved in solar or green buildings or biofuels or wastewater? Where what do you want to invest in? If it's not clean tech, maybe it's ed tech. Terrific companies. So who would have liked to invest in Mathletics? 3P Learning. Yeah, true. It's a globally successful business. Once again, the challenge is, how do I find it? How do I get access to it? I won't do this for the whole presentation, by the way, but ag tech is another great, really, really strong thematic for Australia. That's you can't pick up a paper with people saying they're not interested in doing agricultural investing at the moment. So sometimes equity crowdfunding is simplified as a way to get access to an alternative asset. And our view as VentureCrowd is, you should be able to get access to any alternative asset you like. Alternative assets is one of the fastest growing investment classes in the world. It basically means investing in pretty much anything that's not traditional investments like stocks and bonds and the listed securities market. So you can see there, aircraft leasing, you could be investing in water rights, you might be investing in venture capital or private equity, that kind of thing. Even cryptocurrencies. The reality is it's difficult to build a diversified portfolio because you can't get access. It's very complex. There's a lot of administration. And how do you become an expert on any of these areas? It's difficult. So we, as VentureCrowd, we try and answer that question by giving you access to invest alongside other experts who do make it their job to understand a sector very deeply. They do due diligence, they invest as the lead investors, and we try to procure the ability for people from the crowd to invest alongside them. That's called an investor-led crowdfunding model, typically. So that's the challenge. Next question I'll ask you is, when do you want to invest? At what stage? What does that mean? Like when do I get into it? Is it just the earliest possible moment? I'd tell you no. So this is a slide I've used for 20 years probably in various forms. It's been tuned up a little bit over the years, but over time, companies go through, the successful ones, go through a journey, what I call a private capital journey. And as they go through each of these stages, you'll see the reward becomes less for the investor, but also the risk comes down typically. So you'll see here angel groups like Sydney Angels are really in this angel stage. Accelerators and incubators and so forth are often around this seed and earlier stage. Often crowdfunding platforms are at this seed stage, but not always. And then you go up the curve. You might invite some other types of investors in here, typically institutional investors who can write larger tickets like venture capital, private equity a bit later on, institutional investors who come in at the pre-IPO stage and might only get a small discount, and then you're off to the capital markets. I'll just leave that just there for 1 second and just swap into another concept for you. This is another slide I've invented called the capital funding stack. It's once again just a bit of a recognition of the difference of raising capital now versus raising capital even 5 or 10 years ago. This is typically related to technology startups. Mostly people know that it's founders, friends and family. There's always been government assistance, whether it's COMET or Commercialisation Australia, now called Accelerating Commercialisation. There's angels, and they can be lone wolf investors or people who have just got a bit more money who are friends of the family or colleagues or so forth. But the capacity, as in the amount of money available, and the complexity of dealing with investors has risen commensurately with the explosion of the early stage ecosystem. The early stage ecosystem is all the people and players that come together to help companies be successful and to help investors make better choices around investing. So now, what I call the capital stack is made up of any of these people. Now this could be, just to go back, this could take place in any of these stages. So what have we got here? So angels and angel groups. Angel groups are now much more formalised than they used to be 10 years ago. We've got Sydney Angels, Melbourne Angels, Brisbane Angels, we've got Perth Angels, we've got Capital Angels in Canberra, and there's a bunch of other associated groups. We have all kinds of accelerators like Muru-D, etc. We have incubators like Cicada, who are deep tech, and so forth. We have early stage VCs. Sometimes they're co-investors, sometimes they're lead, sometimes they're corporates and they're investing for strategic purposes off their balance sheet rather than having a special purpose fund. And you also have groups like Blue Sky funds, for example, that put a lot of special purpose vehicles together to do investments. And you also have companies like Baylor Oil, which are listed. And family office would be another area. You get varying ranges of investors, from sophisticated to very unsophisticated, or you get pools of family offices investing together, 20 of them all together, but managed by one person. Like a Raven Capital, for example, originally started as 10 or 15 family offices, all sort of managed by Christian Blazinski, and that morphed into more of a dedicated fund. And on top of the stack, of course, crowdfunding and equity crowdfunding. Obviously, we've been doing wholesale investing because of the regulatory environment in the last 3 years, and now finally we've got laws in place to begin doing retail crowdfunding. No one's quite got their license yet, but all the platforms are put in their applications for their AFSLs with the crowdfunding authority, and shortly we should be able to do our own versions of Brewdog and so on. Exciting times, but there's going to be a lot of teething, and there's going to be a lot of people also on the company side thinking about whether they want to do it or not. And of course, unlisted public company is the current law, and hopefully we'll have private company retail investing midway through next year. So if we put that all together, this is kind of where VentureCrowd plays. We're, as an investor-led platform, we try to give people access to opportunities at different stages of the private capital journey. So to give you a bit of an idea, we raised over $1 million recently for a company called Thinkstro, which is an Internet of Things player, and they had an investment from the Clean Energy Finance Corporation of $10 million in the round as the lead investor. So our pre-money valuation was $43 million, maybe it was 46. The point being, we are right up here in this stage. But if I ask you, well, would you have liked to get into Seek Car Sales or Real Estate Australia before it was listed, even though it was a $40 million valuation? Yeah, of course. You'd love that opportunity. So the ability for crowdfunding to open up or provide access to these opportunities is transformative, and mark my words, we'll have a real shift and impact upon investors and companies in this space. So it used to be that we used to group together as smaller investors, from some kind of a threat, the cold or a predator or whatever, and it was seen as a survival instinct. But now I think that the crowd is becoming far more organised. When you can organise a large crowd, just ask any of the Russian czars what happens if you organise a crowd. They can come together and actually make an impact and act a bit more like the predator. Now, you would have heard of GoFundMe. I think they've had over $3 billion transacted across their platform from 25 million donors. I mean, if that isn't evidence that there's something really serious going on in this space of harnessing and empowering the crowd, I don't know what is. I won't linger on this slide, but these are generally equity crowdfunding stats. You can see that there's significant amounts of money that's happening since a lot of the platforms have started. The UK retail marketplace is growing quite significantly. There's been 46,000 separate investments of 38 million US since in that period there, May to July, 16 to 17. Not a huge amount, but remember it's got to be taken in context of a blend. They're the retail investors only, so you've still got all the wholesale investors. I guess that's the key one, which anyone who's in crowdfunding has sort of been looking at, going, well, what is that? I think there's a huge amount of funding happening in the UK. A lot of it's tax driven. If Jill was here, she would have told you a bit about that. But it's still they're incredible stats for in terms of displacement of the status quo. This is a list of all the number of startup deals that have been done by early stage venture capital funds in Australia. I thought it was amazing. We're backed by Artesian, that's why you keep seeing their name up there. They're one of the founding shareholders of VentureCrowd, and they've done over 131 investments. For example, they have a co-investment model. For example, they're partners with Sydney Angels in our $10 million sidecar fund. So every deal that comes through Sydney Angels that gets invested by the sidecar fund, they have a little stake in. But I thought the interesting part, well, we've done about 20 companies, about 41 deals to date, but we're not a VC. We don't have dedicated funds. We haven't raised $200 million like Blackbird. That's interesting. I think that's interesting, right? And that's with challenging regulatory environment where we've all had to jump through hoops, all the people here who run platforms to try to make our platforms comply, to allow investors to invest, and the amount of money we spend on legals and all that kind of stuff. Guess what? That's gonna keep going up, and same for Equitise and all the others. This is going to go up and up and up and up. So you've got these twin effects of alternative assets globally becoming much more, people understanding much more about diversification. You've got the crowdfunding market generally exploding. Now this is not just equity crowdfunding. This is obviously rewards based and cause based and so forth, debt based. It certainly shows that all the elements there are pretty exciting for what's going to happen in this market. So I'll ask you one more question, which is, how can you invest? So VentureCrowd is a crowdfunding platform. We have a curated model where we look at who are the lead investors in a round. We don't put deals on our platform unless there are lead investors in place. It's a little bit of a different flavour to some of the other platform models. I think some of the biggest players in the overseas markets are definitely company-led platforms. And that's fine. We just have a particularly different model. So we partner with companies, and particularly with referral partners at the front end of our funnel to make sure that we feel like they're high quality investments. We're quite aligned with investors as well as the companies looking to raise money. We think in the long run, it's not going to help if we have really successful outcomes where the companies have raised all the money they want, but they've raised it from unsophisticated investors who then realise that in a year or two that they're really underwater or that they should have done more due diligence. In reality, crowdfunding is more of a passive type of investment style. Angel investing is an active investment style where you get involved, you do due diligence, you run a rigorous process. You might be involved in a syndicate. A syndicate takes time to understand companies and negotiate terms and all that stuff. Crowdfunding's not like that. Crowdfunding, when it's there, you can click a button and you can invest. So there's, I think, an extra duty of rigour and diligence on the crowdfunding platforms to make sure that companies aren't setting their own terms willy-nilly. That's from our perspective. So we are a multi-asset platform. We do property, we do startups, and we do multi-stages, so later stage, early stage. And the other thing we do is, because we have investor-led deals, as I said, for example, Thinkstra already had a $10 million lead investor who was committed. Our recent investment in JRide had $5 million already invested. Our current live deal called Critical Arc has a $3 million lead investor in place. So you're investing alongside lead investors, and we expect just about every deal that we put live to be completed. We don't expect a failure rate because we already have lead investors, and we expect it to get done. It's a bit of a different play with us. So what that means is we are able to then, because of the high quality and the rigor around the deals that actually come on the platform, we're able to work with other partners who might want to bring their investors to get access to alternative assets. Let me see here. So just a quick summary of a couple of companies that we've funded recently in Internet of Things business. And JRide is a airport transfer marketplace, pretty exciting company. It's been through Sydney Angels and the Psycho Fund, and it's been through. It's very exciting business. Probably will list soon. Nextbar is a sugar-free soft drink business, and they have deals with some of the large FMCG players. And ClearState's a property partner, and we've done 2 property deals through them. They're actually land subdivisions, so not buying an apartment off the plan. This is about investing alongside the property developer as an equity holder. So quick summary before I wrap up. We have, as I said, that really just reflects, we have a lot of wholesale investors, and the typical investment size on average across all our investments is 35K. That will absolutely come down as retail comes about. We've done about $20 million on the platform across about 41 deals, and you can see some of those portfolio companies. You might have heard of Ingogo, which is a mobile payments business. Zookle used to be was a textbook lending business for students. A neobank, an order ahead and pay business called HeyU. Safety and Securities, Critical Arc. So that's just a selection. As I said, we've got quite a few. So that's it. Thank you.